Welcome to Anafram Market Perspectives.
Friday market recap, tech heat, tariff fog, and a rebound in momentum. Welcome back to Anafram Market Perspectives. In the next few minutes, we will walk through the week's biggest moves, the latest on tariffs and rare earths, the key data prints, a quick tour of the futures board, then our technical read on QQQ, Netflix, and Tesla. Let's get into it. S&P 500 weekly recap. Picture 1, equities finished the week higher, with leadership returning to mega-cap tech. From the heat map you shared, Apple gained about 4.9%, and Microsoft added roughly 1.8%. Amazon advanced a little above 3%, and Tesla climbed about 4.7%. Communication services held up with Meta near 3.1% and Google close to 0.7%. Semis were mixed. Nvidia hovered near flat, while Broadcom slipped about 2.8%. A notable laggard was Oracle, off roughly 10% on follow-through selling after security headlines. Financials were uneven, with several banks slightly red. The takeaway, breadth improved inside growth, while defensives were steady rather than dominant. Tariffs and trade, what changed this week? Fresh analysis from the tax foundation pegs tariff passed through at an estimated 4.9 percentage point lift to retail prices, with imported goods costs up roughly 6 percentage points and domestic goods up about 4.3 percentage points. That aligns with the Atlanta Fed signals that cost expectations are rising into next year. On the diplomacy track, the White House confirmed a Trump and Xi meeting next week in South Korea after minister-level talks in Malaysia. China tightened rare earth export controls, and the United States moved to secure supply via an Australia Critical Minerals Pact. Markets now view a short truce as plausible, yet the risk of additional measures on software exports, pharma pricing, and cabinet or wood products remains. Bottom line, policy is still the swing factor. Any constructive tone next week could extend the bid under risk assets, while a setback would reignite the tariff premium in prices and volatility. Economic data, week in review, China mixed but resilient. Q3 GDP grew 4.8% year over year, a touch above the 4.7 forecast, with 1.1% quarter over quarter. Industrial production surprised to the upside at 6.5%, and the jobless rate eased to 5.2%. Canada's September CPI core rose 0.2% month over month and 2.8% year over year, while headline printed 0.1%. In the United Kingdom, headline CPI stayed at 3.8% with a flat monthly print. U.S. weekly oil data showed crude inventories falling, a supportive input for energy. U.S. existing home sales improved to 4.06 million annualized with a 1.5% monthly lift, hinting at tentative stabilization. Futures and commodities overview, picture 2. The futures dashboard shows a risk-on tone into the close. S&P 500, NASDAQ 100, Russell 2000, and Euro Stoxx 50 futures are green. WTI is near 61 to 62, and Brent near 66, both higher on the week. Gold sits around 4,140 per ounce, and silver near 48 to 49, both firmer as hedge demand stays alive. Copper is above 5.0, a mild positive for cyclical growth. The VIX panel reads about 18 to 19, lower versus the midweek spike, which fits the calmer finish we saw in equities. The message, cross-asset pricing, leans constructive, yet still sensitive to tariff headlines. Technicals, the bonus section, our Monday picks QQQ, picture 3 price reclaimed the Ichimoku cloud on the 5-minute view and is riding the top of the cloud into the close. The conversion line sits above the baseline, and the lagging span has cleared price, which keeps the short-term bias positive. MACD is flattening near the zero line, suggesting momentum is steady rather than explosive. If buyers defend the cloud top near 609 to 610, a push towards 613 to 615 is reasonable. A slip back inside the cloud would flag consolidation first. Netflix picture 4, earnings Tuesday EPS missed at 5.87 versus 6.96, while revenue was in line near $11.51 billion. The stock gapped down about 10%, with Brazil tax noise amplifying the reaction. On the chart, prices below the cloud, with MACD negative, but improving as the histogram tightens. First resistance sits around 1,115 to 1,116 on your chart labels, until price can close above the baseline with confirmation from MACD crossing up. Rallies look like supply tests. Tesla, Picture 5, earnings. Wednesday EPS landed at 0.50 versus 0.54, while revenue beat at $28.1 billion versus $26.22 billion. The stock dipped post-print, then reclaimed ground. Now prices above the cloud, testing the 449 area. Conversion above base supports a constructive bias, and MACD is curling higher, holding 445 to 446, which aligns with the cloud top and recent swing, keeps 452 to 455 in play. Lose that zone and a retest of 440 becomes likely. Final takeaways: markets found their footing as mega-cap tech carried the tape. The tariff path is still the wild card, yet the scheduled Trump and Xi meeting reduces worst-case fears for now. Data were good enough to avoid recession talk, not hot enough to reprice rates. Futures and metals point to cautious optimism. For positioning, we continue to favor disciplined adds on dips and leaders while respecting levels defined by the cloud and MACD. Next week, watch tariff headlines, the rare earth narrative, and follow through on QQQ at the cloud top. That wraps this week's Anafram Market Perspectives. If you found this helpful, like and subscribe, and we will see you Monday for the setup.
Thanks for watching. If you found this valuable, hit subscribe and share this with others. See you next time on Anafram Market Perspectives.